Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April the 18th. We are going to review the economic data and also some news regarding banks' earnings. And more importantly, we are going to focus on the Nasdaq technical analysis that today is super juicy to the downside. So if you're a bear, you are having a nice day. So let me first start with building permits preliminary for March, and they are going lower. Housing starts month over month going into negative territory, the same as building permits. So I think builders have a really big problem with demand destruction on the housing markets. And this is most probably due to the Fed raising interest rates and mortgages being on the fight. So this is not a really impacting economic data, but still are showing signs of demand destruction, and this is the focus of the Fed. This is regarding economic data, and regarding earnings, we are starting with Bank of America that, oh boy, they are crushing it. Bank of America beats on both earnings, EPS, and revenue, and they are really having cashing on the rising of interest rates. So as you can see, they jumped to 25% to 14 billion during the quarter thanks to interest rates rising. So every business segment performed well and they grew client relationships and accord organically. So they are right now, let's take a look to the chart. They were really hyped into the pre-market, but oh boy, look at this. Boom. Really crashing. Minus 0.87. Why? Because I think investors are starting to think, okay, you did well due to interest rates raising, but how about your other segments, your other sector of the business? So, well, it's not enough for investors to say, okay, you did well due to Fed raising interest rates, but how about the other things that you should be focusing on? And it's like a mixed sentiment, and they are not happy. Stakeholders are not happy. Let's go to another bank. Goldman Sachs missed first quarter revenue. Earnings 8.79 versus 8.10. So they beat on earnings, EPS, but they missed on revenue, 12.22 versus 12.79. And I think that the worst thing about what Goldman Sachs is suffering is that unlike most diversified rivals like Bank of America and JP Morgan, Goldman gets the majority of revenue from Wall Street activities like trading and investment, and they are not strong enough to really have strength into the earnings. So let's see Goldman Sachs. Since the earnings release, we have been crashing it. They are now bouncing a little bit, but oh boy, this was like a 5.75% flash sell-off, and now we are rebounding like 2.46. Right now, minus 1.60, and it's not looking good also for Goldman Sachs. What else? Well, we talked about Goldman Sachs. We talked about Bank of America, but what about Johnson & Johnson also reporting earnings? So right now they are in the negative 2.67 because they basically beat both top and bottom estimates on EPS and revenue, but I think the CEO saying that they're having a strong performance across all three businesses, but I don't think Johnson & Johnson is feeling the demand and supply battle. I think Johnson & Johnson, despite proving higher than expected earnings, stakeholders were focusing on the outlook, and I think that outlook is not good. So this is Johnson & Johnson minus 2.71. Look at this. This is one that is really, really filling the gap almost. Really, this is buy the rumors, sell the news. They gapped up ahead of earnings and they are just being crashed into the gap. So really technical analysis, and I think overall today is one of those days in which demand destruction just destroys everything. But before moving again to the charts, let me say one last thing regarding Elon Musk. Elon Musk plans TruthGPT AI to rival OpenAI DeepMind. So this is Elon Musk focusing on the big toy right now on the media and the news and on the markets on AI. And now that he has bought Twitter, I think he tries to capitalize on the AI movement, but also with, I think, is a good idea because he thinks that he wants to start a new AI initiative because he fears that existing AI businesses are trained to be politically correct. And this is against truth and what he wants to build upon Twitter. I think this is a good idea, honestly. Let's see how it ends up going, because another one is entering the battle into the AI world. And first Microsoft, then Google, then Nvidia, and all the chip stocks putting AI into the chips, and now the big Elon Musk. So this is something that we have to follow up, and I think it's could be wise, could be really good. So let's now let's go to the chart, and let's start by saying, oh boy, today we got a really nice move on the Nasdaq. But I think a lot of people were expecting continuing higher, but look at this monstrous move into the overnight. At London Open at 3, we just started going up and up and up. And based on my experience, whenever overnight traders put into positions that they start seeing that they are going against, I think several people, I hope a lot of people took profits into the pre-market, into the open. But when these weak hands start seeing that the profits are being gone, they just capitalize. And if we see the 30-minute chart, as always, I'm building my support and resistances based on the 30-minute chart. So we have this pivot in the open market trading hours, and then we have several pivots back in early April. The most important one was 13,300 that we almost top ticked. So we destroyed this one in the overnight, but let me show you one thing. We followed the moving average, we consolidated, we did an up thrust before flashing. So all this zone was just distribution, and if you see this gray dashed line, this is the point of control we did the overnight. We just left it at the open and we never tested again. We put a really good, I took this trade, this bear flag into the open with this breakdown. I took that one and I added on the second one. I didn't expect the second one, but I took the opportunity. Right now we are consolidating. Right here we did a stop hand right down right here for low day. This might be a bear trap into a V-shaped reversal. We don't know, but we've been seeing this kind of nasty price action the last days. So point of control is at the lows, and right now we are starting to crossing that. I think a lot of bulls are expecting this kind of V reversal into the close because we have a lot of those. we have this one, we have this one, and we have this one into the other way. So we end up doing the same thing, the same nasty thing that we've been doing the last couple of days? Who knows? But we have to watch out for that. The first pivot I would like to be taken out is this one. I think this one is pretty interesting for bears to just take out those positions. And I think really for a bull case is just this one. I think this level, it's quite important. 13,212, because it's the same as VWAP, and you see the 200 moving average for the 1 minute chart is starting to go lower. So these two levels, in between this area, I expect some battles between bulls hoping for a V-shaped reversal and also some shorts willing to add. So let's see what happens. But what is true is that right now, Nasdaq is barely in the green, is flat due to this kind. Since the open, it was a 1% in the red, 1% pullback. So for one side, be careful bears. We've seen this in the past. I already covered around here. Nice day taking advantage of these two bear flags on momentum to the downside, but you know what happens. Be careful. And bulls, just don't trade on hope, just trade what you see with discipline and risk management. Don't think that they will always do this V-shaped reversal, because one day you will get caught in a big flash. The rest of the markets are really interesting. Let's start with gold. Gold, as you can see, is very sensible to higher interest rates. And there are a couple of Feds that today were just seeing things that are not bullish. So for example, Fed Bullard, I still see adequately restrictive policy rate at, be careful here, 550 to 575 range at terminal rates. Bias to hold for longer until inflation is contained. This is brutal. And it's against this kind of move on the gold. So we'll have to check if Bullard is correct, because I think markets right now, they don't buy that. They don't think Fed are going to push for 550. Let's see who wins. Another Fed Bostic, saying my baseline is to keep rates unchanged after the next hike. So the next hike and 25 basis points most probably, and then hold it there higher and longer. Remember, those expectations, markets are still expecting. If we check May, this is interest rates futures. Look at this ascending triangle breakout to the upside. We are already at 5% for May. So 5% is already priced in. Okay. September also priced in 5%. But the interesting thing is that more and more, this is December this year, December is pricing in less cuts than before. Markets are still saying that Fed will hold probably for 3 to 4 months and then start cutting this year. I don't agree with that, and Fed clearly stated that they don't plan to cut any rates this year. So be careful, because expectations from the market are still there. And if those expectations are not met, be prepared, because this is going to be the first of a very long sell-off. As you can see, really clear resistance here. I was expecting here. Let's see what happens. But as always, you have to really manage your positions and your expectations. Are you expecting a V-shaped reversal as usual, or are you just trading what you see? If you trade what you see, you have to be patient. I was patient all these last days, waiting for those opportunities, and I took those opportunities, 1 and 2. And then I'm not greedy, I'm not being greedy, but the markets are at 70% greed, both Bitcoin and stock markets. And something is being prepared right here, because if we check the daily, we have been buying the dips since weeks ago. Since this push, we've been range bound and buying dips, both bottoming tails, sell-offs into engulfing candles. This market is really nasty. And if you are not prepared, and if you are not managing your risk, you are going to be destroyed. Dollar. Dollar is, well, bouncing off 100. That's something expected. But if we check the 30-minute chart, it's just trying to build something. This was a nice support, range support that we broke out, but we then saw weakness. So I don't have a clear picture yet. I don't think if you want to be a bull on the dollar, you just have to wait for 102 to break this pivot, and then I think a move towards again 105 could be good if macroeconomic weakness against dollar is gone, because dollar is right now feeling a lot of pressure from different sides, and I don't think this is a clear trade yet. Gold is having a nice push, but it depends. It's very sensible to rates, and right now we are increasing rates. Let's see what happens. 2-year yield, we saw that macro structure change right now 0.38, 4.21. And the 10-year, look at this, also market structure change going towards 3.6%. This is very interesting to the midterm for investors due to the inverted yield curve. Remember that we've been in this channel that we broke to the upside due to the big issues with banks, and now look at this. We broke this range to the downside. We never closed below minus 0.6, and this is not doing well. Remember that 0 is the recession signal, and as long as we continue higher towards that, we are going to really revert the inversion and Fed will try to cut rates at this level. But as long as we remain inverted, there's probably more hikes in the horizon. What else is important? Sectors. XLK is barely in the green, but let me show you this kind of chart that I always try to show in this channel in my videos, because you have to really go through all the sectors to really see the rotations from Wall Street and where the big money is going. If we check today's price action, you can see that energy is ripping, industrials and consumer discretionary is barely in the green. But look at these defensive sectors. XLV, XLU, communications, real estate are all in the negative. If we change to the 5 days, the picture is really different. We have financials in here because we are on earnings and they did pretty well due to interest rates. But more and more we are starting to see higher consumer discretionary, higher technology. But look at this, with lower defensive sectors, there is a change into the rotation. And what you want to see is to see consumer growth and technology going up, and at the same time rotations and defensive going up. You want the whole market to follow through and to go higher. You don't want technology to just lead on FOMO and on expectations of earnings, because that's not practical. That's not the real issue. Remember that earnings is everything. And equity risk premium is just nowhere near a big level for investors, and we are overvalued. Apple 40% X on earnings forecast or growth, Tesla, Microsoft all in the 30s. There's no way investors like these stocks at these levels of price. So you just have to think about everything and take your own decisions, but there are a lot of markets that provide leading signals and convergences, divergences for your overall position and bias. We are still trying. Look at this. We are doing higher lows against this resistance level. That doesn't mean that the V shape is going to happen, but I would be cautious about this level for bears. 17,200 would be my last resort for taking profits if I was a bear. I already took profits, but remember that anything can happen, and this move already happened twice this week. Well, one thing on Friday and another one yesterday. So be really careful here. And I think that's all from my side. I uploaded a video this morning, a YouTube short, really interesting regarding the kind of information, the amount of stocks that are above the 200 moving averages compared with the SPX. So on the SPX, we really saw a big bottom, and right now, since the 2 February, we are approaching this same level, but with only 48% of stocks above the 200. Please take a look at that video. That's really helpful. That it will provide you and open your eyes regarding the kind of pumping that we are seeing, because we are seeing fake pumps everywhere. And perhaps for you sorts, that will make you be a little bit more patient, because patience is everything and risk management is everything. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel, support the channel. Be with us to really understand these markets and hopefully learn something that will help you progress and growth in your day trading or investor trades. I really hope you had an amazing trading day. Congratulations, bears, but don't get greedy as for the bulls. Anything can happen, and we are tired of seeing this kind of V-shaped reversals. Be careful and remember that discipline and risk management are key for success. Stay safe, everyone.